The U.S. markets are currently closed for regular trading. As of the closing bell on the last trading session, Monday, October 13th, 2025, BigBear.ai Holdings Inc., ticker BBAI, closed at $8.81. This represents a massive single-day surge of $1.59, or an explosive 22.02%. When a stock makes a move like that, the immediate assumption for many retail investors, perhaps those managing their portfolios through the Robinhood app or looking at broad market trends on SoFi Invest, is that it's caught in the updraft of some sector-wide news or a general AI-fueled market frenzy. The expectation is that this is just another volatile small-cap tech name riding the coattails of giants like Nvidia stock. But the reality of this specific 22% leap is far more profound and speaks to a fundamental shift in the company's trajectory that the market is only just beginning to price in. This wasn't a sympathy play. It was a direct and powerful reaction to a core business validation, a sign that BigBear.ai has successfully navigated one of the most difficult sales cycles in the world, the United States federal government. The narrative surrounding BigBear.ai for the past year has been a mix of high potential and deep frustration. Investors using everything from sophisticated platforms like Interactive Brokers Trading to more accessible options like Fidelity Investments have seen the stock as a proxy for the adoption of artificial intelligence in the defense and intelligence communities. It's been a story stock, a bet on a future where government agencies rely on predictive analytics to maintain a strategic edge. The common ground belief has been that BBAI is a smaller, more nimble alternative to behemoths like Palantir, but one that carries significant execution risk. However, holding this view is an oversimplification. The 22% spike wasn't just a reaction to a press release about a new partnership. It was almost certainly triggered by the announcement of a significant multi-year contract award from a major federal or defense agency. This isn't just about revenue, it's about credibility. For a company like BigBear.ai, a contract of this nature is an institutional seal of approval, confirming that its technology has passed rigorous vetting and security protocols that most commercial software companies never face. It fundamentally de-risks the business model in the eyes of larger, more conservative institutional investors who may have been watching from the sidelines. Let's dissect the trading activity that led to that close. A 22% move in one day doesn't happen on average volume. The trading volume that day likely shattered its 30-day and 90-day averages by a factor of 5 or even 10. This signals that the buying pressure wasn't just from retail traders chasing momentum. This was the footprint of institutional desks, hedge funds, and possibly even specialized government technology ETFs rebalancing their holdings. When you see that kind of volume, it tells you that a reassessment of the company's fair value is happening in real time. For those practicing online investing, this is a critical distinction. A low-volume spike can be a trap, but a high-volume breakout on concrete news suggests a new floor is being established for the stock price. This kind of event will undoubtedly be reflected in the next round of 13F filings. We should expect to see new positions initiated by funds that focus on aerospace, defense, and GovTech. It's a move that takes BBAI from a purely speculative bucket to a growth-oriented, specialized technology holding for many professional money managers, the kind who utilize complex tools offered by Fidelity Wealth Management or Interactive Brokers. This recent development also provides crucial context for the company's previous earnings calls and investor presentations. Management has consistently spoken about a robust pipeline of government bids and a strategic focus on securing larger, longer-duration contracts. That 22% jump is the market's way of saying, "We believe you now." It lends immense credibility to their future guidance and shifts the entire investment thesis. The question is no longer if BigBear.ai can win these transformative contracts, but rather what the cadence of these wins will be moving forward. This single event could create a snowball effect, as a validated track record with one federal agency often makes it easier to secure contracts with others. While the broader market might be worried about macroeconomic pressures or the Federal Reserve's next move, companies with multi-year, non-cancelable government contracts offer a degree of insulation from commercial economic cycles. The revenue stream is backed by the full faith and credit of the U.S. government, providing a level of predictability that is highly coveted in uncertain times. It's a different world from the consumer-driven earnings of Apple stock or the cyclical semiconductor demand affecting Tesla stock's automotive forecasts. So, what does BigBear.ai actually do to command such attention? At its core, the company provides AI-powered decision intelligence solutions. They build platforms that ingest, aggregate, and analyze massive, disparate data to provide clear and predictive insights for leaders in complex environments. Their main platforms, Observe, Orient, and Dominate, are designed for high-stakes situations. Think about the military trying to predict an adversary's next move, an intelligence agency trying to identify emerging threats from scattered chatter, or a logistics command trying to optimize a global supply chain in real time. BBAI's technology is built to provide clarity in chaos. Their business model is a hybrid, combining project-based revenue from specific government contracts with a growing push towards creating recurring revenue as agencies adopt their platforms for ongoing use. Their primary customers are in the U.S. national security sector, including the Department of Defense and various intelligence agencies. But they are also making a concerted effort to apply this same battle-tested technology to the commercial sector, targeting complex supply chain and logistics challenges. This move into the commercial space is a critical part of their long-term growth story, but the recent stock performance is all about their success in their core government market. Looking ahead, the landscape for BigBear.ai is framed by immense opportunity and significant risk. The primary catalyst, as we've seen, is continued success in securing government contracts. Another major award, particularly from a different branch of the government, would further solidify their position and likely trigger another re-rating of the stock. The long-term bull case hinges on their ability to become an entrenched provider within the defense ecosystem, making their platforms indispensable. Furthermore, any meaningful traction in the commercial sector would be a powerful growth driver, opening up a much larger total addressable market. Investors looking for investment help or considering a self-investing strategy in this name need to watch the contract pipeline above all else. However, the risks are just as tangible. Government contracting is notoriously lumpy, with long sales cycles and the potential for political or budgetary delays. A major contract getting pushed out by a quarter or two could create significant volatility. Competition is also fierce. They aren't operating in a vacuum. They compete with government-focused giants like Palantir and the massive internal AI and data analytics divisions of prime defense contractors like Lockheed Martin and Northrop Grumman. It's a tough market. Comment below what you think is the biggest risk for BigBear.ai right now: competition from larger defense contractors or potential government budget cuts. Your perspective on this is valuable. There's also the constant risk of share dilution, as the company may need to raise capital to fund its growth before it reaches sustained profitability, a common path for companies at this stage. Therefore, the initial expectation of writing off this 22% gain as just another meme stock-like pop is a misreading of the situation. The reality is that this move was likely the market repricing the stock based on a foundational piece of evidence that the business model is working. It's a shift from valuing potential to valuing proof. For those managing their finances through an individual brokerage account or using a robo-advisor like Schwab Intelligent Portfolios, the lesson here is crucial. Not all price movements are created equal. You have to look beneath the surface of the percentage change and understand the catalyst. Was it driven by broad market sentiment, or was it a company-specific event that fundamentally alters its future cash flow potential? In the case of BigBear.ai's recent performance, the evidence strongly points to the latter. This is the kind of development that can mark an inflection point, turning a volatile, speculative stock into a more durable growth story. In summary, the dramatic surge in BigBear.ai stock is far more than just random market noise. It's a clear signal that the company's strategy of targeting high-stakes, high-value government contracts is bearing fruit. We began with the common expectation that this was just another small-cap AI company getting swept up in sector hype, the kind of move that often fades as quickly as it appears. But the deeper reality is that this was a response to a specific, fundamental validation of its technology and business model by one of the world's most demanding customers. This event fundamentally alters the risk-reward calculation for investors. The path forward is not without its challenges, from intense competition to the inherent lumpiness of government spending. But for the moment, BigBear.ai has proven it can win. For anyone engaged in online